What's up guys, Chartsmith here, back again with a new video. As you can see, my chart is a bit of a mess when I zoom out, and that has a good reason because a lot has happened in the past, well, it's not even 2 days yet, yesterday and to this morning. So I want to take you with me in analyzing what happened yesterday and what happened this morning. I made some mistakes again, and today I've been really unfortunate. So for me, the last what is it? 2 weeks have been a bit of a mess, but it's not bad if you learn things from it and adapt it in how you take on the markets, and that is what I'm doing. So on the long term, I'm only gonna be winning. Um, so yeah, let's get into the analysis. Let me think what I think I will recap yesterday first, because if you watched the video yesterday, then you are familiar with what I was looking at. Maybe let me put on replay mode. Let's put it over here because this isn't really relevant. Like this. As you know, if you watched the video of yesterday, I was pretty short biased in the morning because of all the build-up liquidity. But I also said it is up until proven otherwise, especially after what we did in the morning with pre-London. We took out extreme liquidity and then London just had been grinding up. But I was looking to the liquidity on the lows. I was looking at that over here at these highs. And that is also where I made a tiny mistake. I can zoom in it for you guys. As you see, there are some drawings here. I put that in the moment. But let me skip this song. But I was looking in a different direction than the risk reward tool you see in the chart. I was looking for shorts. Why? Because we took out pretty nice liquidity point over here and over here, and it was just before the liquidity on the high. So I thought, okay, if the market wants to dump down, maybe it is gonna leave open this high and go towards all the trend liquidity on the lows. So I was looking for that over here. Also a for value gap PD array that the market could hold and test back to short, as you can see right here. So that works some confluences for me. Then what you also did right here, if you are looking short, is you close below here, getting in some sellers. You also had a pullback here, indicating you really got in some sellers. I was looking at, okay, if we're gonna take out that high that we did here and reverse into this bullish for value gap, that's also why it is in the chart. It's a bearish for value gap, sorry. And then, yeah, give me some short entry. I'm gonna short. Well, as you see, there was no short entry, and you also didn't want to look short here because it is still up until proven otherwise, and it was just pretty clear that the market needed more liquidity from the highs. But I was just too biased. It has been a long time since I've been too biased. I did that when I started trading a lot. Yeah, I was just quickly too biased, but I got rid of that pretty easily. Just what are the facts? Keep to the facts. And yeah, I knew it is up until proven otherwise, but I was just a bit too blinded by this trend liquidity. You also right here had a SFT with Asia high, so that also was a thing for me why I was looking for a short there. So it was the SFT, it was this liquidity that had been taken out here, pretty much all your liquidity before these highs. So for me, the place to look for a short, but the market wasn't ready for shorts yet. So, mistake there, but what happened here? You got a pretty nice long entry towards the highs, and that is because right here, as you can see, a lot of buyers are gonna step in here. Then you take out those buyers right here at the lows. You also get this really nice bearish for value gap. What does the market also do? Come up, try to use the bearish for value gap and make new lows. As you can see, it can't make new lows. From there you inverse the gap, test it back perfectly. You can also put your stop loss below this low because you confirmed a higher low over here. So it was a pretty tight stop loss, and to your technical target it would have been almost 5.5 risk to reward. So pretty dumb mistake. I also just stepped away from my chart a bit when I saw this pump up, and then I came back like 2 minutes later and I thought, shit, I'm so stupid. Then I saw it. I saw, oh yeah, it's up until proven otherwise. Really nice manipulation, also an entry. And then I thought by myself, yeah, I just messed it up. I messed it up. My mistake. Too biased. Yeah, dumb mistake. But I was looking at the right direction, I knew that, but it needed more liquidity from the highs, as you can see. Then after that we had the news event. News is always gonna do what the market already wanted to do, but just a bit quicker. Well, it was a pretty big death candle with a big continuation as well. If you see where we bounce from, it is, yeah, you could draw in this box with also this liquidity over here. That is just old liquidity the market wants to test back sometimes. That's also why I had it in my chart. Just a box where the market tapped into. Also PD arrays, of course, high time frame for value gaps. Just some things to fill up. Then also later in the night, you had a short I wanted to talk about as well. As you can see, AM pumped up. After AM we we came down again. Then lunch was more bullish than bearish because of this local SMT and this manipulation over here. So that was also up until proven otherwise. But when we came up and when PM started, we rejected AM high. After that, we broke internal structure towards the downside. What happened after that? People are gonna start selling here because you put in a lower high, you put in a lower low. So a lot of people are gonna sell right here. What happens? You take out those sellers and you have a really nice gap and structure low. So if you're gonna break below here, this is your protected high. And a really nice gap that you use to make that high. You inverse the gap. You also you also broke below this low, so this is now your lower high. You could put your stop loss here to be safe, but for the risk to reward to the low, you would have needed to put your stop loss above all liquidity. Also fine to do here because you have had your manipulation. You also have had a confirmation that you're not gonna come back to here. And as you can see, TP got front ran and you would have been stopped out if you put your stop loss right here at 1 risk reward and otherwise at break even. I didn't take this trade as well because I took the night off. So that was yesterday. We can clean this up from the chart. Yesterday, enough opportunities. Unfortunately, we couldn't take advantage of it, but again, we learned from it. That is also really important. I want to get into the analysis of today right now. Let's first start at a high time frame. Already a pretty long video because there's a lot to talk about. We are still in this pretty big 4-hour BPR and bearish for value gap. It's just a PY for me in the chart. Today we once again tapped in it and rejected from it. There's not really anything interesting to see here. No. As you can see, pre-Asia and Asia was just a big grind up. Also not really interesting things to see. The only thing was this 5-minute that you rejected here and you rejected here. So that was also a thing I had in my chart. I put in my chart and as you can see at 9 AM it got rejected perfectly. Yeah, we can zoom in pretty quick because it's pretty easy. This is your only PD array. You have some liquidity on the highs as you can see. You have a big SMT with AM high. Do I think that is relevant? Yes and no. The market can get a bit bearish from it, especially when you have trend liquidity right like this. Am I gonna pay really much attention to it? No, because this is for me more a sign that we are gonna want to trade towards this high than that we're gonna need to make new lows from it. So it's just a too big of a difference for me to really pay attention to it. But maybe I'm wrong. But the SFT wasn't the reason for a short right here, because that is what I want to get into. Rejected the 4 hour, we rejected this nice 5-minute PD array. We also took out really nice liquidity over here. And I wanted to look at shorts. So we took out that high. We made a new higher high. After that, we broke down below, making it more bearish than bullish. What is gonna happen here? A lot of people are gonna start selling here. We also broke below. No, it wasn't a break. It was your 5-minute structure low to break. You just hunted that low. And after that liquidity hunt, getting in more sellers, you took out all your sellers. Only the smart money and the market makers are gonna be positioned right here, and that is also why I want to see this high get protected. Well, you protect the high, you don't go further than your internal liquidity. You take out your internal liquidity. Right now I'm really sharp for shorts. As you can see, there are two for value gaps in right here, and the RR tool is here. And why is that? Because yes, you hold this for value gap, but you also hold this. And why is this one bigger than this one? That is because if there is a volume imbalance like this, it's a pretty, well, it's a too thick volume imbalance. But I have been wrecked with these kind of fake breaks before. Then what happened was you broke below this for value gap without the volume imbalance. Then you manipulated once more and then you got the dump down. So that has happened to me, and from then on I started, if you have a volume imbalance like this, started drawing in my fair value gaps with the volume imbalance. So that is why it's bigger. There was also the fair value gap I'm watching and not this one, because as you can see, after the manipulation right here, you inverse the fair value gap after trying to make a new high, which you couldn't. Inverse the fair value gap without the volume imbalance, test it back, and from there on you just start ripping down. But you didn't inverse it with volume imbalance, and that is what I was waiting for. That you inversed it right here, put in the order, and as you can see, the order got front ran and you just ripped down towards the lows. Technical target was the first one, Asia low, so that would have been clean almost 5.5 RR again. So that was front run number one because of a volume imbalance I drew in. Am I mad about it? No, because if I would have put it in right here and I got wrecked just like I have been multiple times back in the days, then I would have slapped myself for the head and thought, yeah, you always draw it in with volume imbalance. So it's just a thing for my mental. I'm fine with this front run. Just a bit unfortunate, it can happen. It could also test back that gap if it wanted to in combination with this 1 minute bearish for value gap. It didn't, so a fortunate front run. Then when you came to the Asia low, that was my PY for longs. Of course, if you needed more liquidity, there was a lot of build up liquidity at these lows here, but this was the first PY zone. You also, right before taking out Asia low, had a really nice pennant, a retail pennant over here, and all the people that were buying or selling here, of course, as you can see, build up liquidity. So there's just a war between bears and bulls, dumb retail money that is just buying and selling for no reason at all. Then most of the times when you break out of the pennant on one side, you're gonna rotate towards the other side. In this case it was also really clean because you took out Asia low, made an SMT with Asia low and had internal structure to break. And if I zoom in on the gaps, once again As you can see, a fair value gap without imbalance, without the volume imbalance, and with volume imbalance. And the R2 right now is at the point without volume imbalance. Why is that? Because I thought, okay, this morning I got wrecked because I drew it in with volume imbalance. Let me just try it for once without the volume imbalance. So I put in, no, let me zoom in first because I'm not done yet. You use that gap to take out a shallow, make the SMT, and it's also your structure high. So if you're gonna break above it, then your structure low will be this low, and you can expect more upside. You have manipulated all the retail money, smart money, and the market makers can step in here because you have manipulated. You took out a really big liquidity point. Enough orders can be filled right here. What did I do? I watched this one, and I also, it wasn't the only reason of what happened this morning. There was also another reason. I saw it got respected really nicely on the 2 minute. It wasn't that we got body closes in here before taking the low, because then I would have drawn it in with this. I saw we took the low without using this volume imbalance. So what does that mean? If the market did this and then took the low, every day of the week I'm not gonna put in this, because then I know it gets respected with the volume imbalance. Right now it didn't. As you can see, it perfectly gets respected without the volume imbalance. So I put in my order after we inverse it right here, as you can see, on the fair value gap without the volume imbalance. I put my stop loss at a shallow and all this old liquidity over here, because I want to be aggressive, and for my risk to reward to my technical target, this order block right here, it was perfectly 3 risk to reward. So that was my order. I really was sharp on the gap with volume imbalance 1, because yeah, what happens if we are gonna respect that one and not mine. And you also had this 5-minute BPR made at that place, so I was really doubting myself. Oh, am I gonna put it there, because you have a 5-minute BPR in combination with your 2-minute with volume imbalance. But then I would need to put my stop loss above here, just below all this old liquidity here and your breakout candle. That would have been the play right there. Then you could take your profit right here. Oh, let me put it in right. Buy here. You take profit right here. In combination with this, yeah, you can put in this whole zone if you want to. And I've put it in like this because of the first body and this whole wick before this liquidity. That would have been the place I would take my profit if I played it right like this. But I thought, no, I'm just gonna stick to the plan I made from the beginning. I'm gonna put it in at this one without volume imbalance. Stop loss right here. And I would have targeted right this, the order block. Yeah, in hindsight, pretty stupid, because your risk reward and your stop loss would have been fine if you did this. It wasn't a really strange thing to do, but I just didn't, because I thought, okay, my stop loss is a bit more safe right there, and I must say it really is more safe right here. It is the safest over here, but then your risk to reward wouldn't have been really nice, because you can't expect from the market to take out this high. So the safest thing to do was this, but then you would have to target this for the best risk to reward. But you can't expect from a market to do this, because of course we have a big dump down. So that is why I wanted to target this order block at the least. And yeah, the nicest one was here and here. But yeah, I put it in right there. I stick to my own plan. I thought the market would tap into there. once again got front ran and the one with volume imbalance. So if I stick to the normal plan I always do with volume imbalance, I would have been filled. Stop loss right here, and then I would have a nice TP. From now on, I'm just gonna stick to my old plan. Draw in the fair value gaps with volume imbalance. Also put in your order with the volume imbalance. You know. But yeah, two pretty unfortunate things today. Front run here, front run over here. Which, yeah, okay, fine. Not a really way to a nice way to end the week, but maybe we're gonna get a new trade at the end of the day. Right now we're gonna have Red Folder news, core retail sales in less than a minute. Then at 4 p.m. we're also gonna have two Red Folder news events. So I'm not gonna trade until the night sessions today. And what can we expect? That is pretty difficult to say. We can put in a higher low right here and gonna make new highs. That can be likely. We also have enough liquidity on the lows to take out. So if it's gonna need to take out liquidity from the lows, we will see. I can't really predict something right now because we're gonna get some news candles. You never know what happens to the market. It can do this, take out all the liquidity from the lows, return from there, or as you can see right now, not a really significant news candle. It can just put in a higher low and a new higher high and take out the highs. We just have to wait on the news events and see what we're gonna get from there. So I can't really give you a idea of what I'm gonna do today. I'm just looking at local price action. Of course, I can point out my PY zones, these lows to take out for longs, also this low. These are my long PY zones. If we're gonna break below here, it's getting a bit too bearish for me, so then we can expect more downside. If we're gonna come here and make a lower high, also more bearish than bullish. If we're gonna put in that higher low here and then a higher high and a new higher low, of course, then we're gonna be bullish. So that are your scenarios, and then maybe we can short here again. We'll have to see, that's all local, but that are my points of the interest. And that will be it for today. I've yapped a lot again. I have been pretty fortunate, made some mistakes, once again learned from it, and then we will see what happens today, and otherwise we're gonna have a new trading week next week. And that is also when I'm gonna make a new video again, and when I would like to see you again. If you enjoyed this video, I know it was a bit long again, but there was a lot to talk about, a lot to learn for you guys as well. So I hope you learned something. I hope you enjoyed it. If you did, leave behind a like. Also leave behind a comment, so I know you enjoy these kind of videos. Subscribe to the channel to be updated on future videos, and then I will see you next week. Ciao!